I sold my MSTR, and the reason I sold my MSTR is actually very, very simple. I bought it before we went to 124K, right, on that run-up. I was like, okay, Bitcoin looks bullish. I think we're going higher. I'm going to buy MSTR as like a levered play. We hit an all-time high, and MSTR kind of went up. And then we had the deleveraging, and MSTR got wrecked. So my thesis was Bitcoin's going to go up, and MSTR is going to be a levered play on Bitcoin. It's going to do better. It did neither of those two things. It did far worse, even though Bitcoin did great. I took a loss, and honestly, I don't care. This is part of the journey. If we trade down to 100, I think we go to 95, and if I think we go below 95, I think we're heading to 80. That's a horrible thing. MSTR is going to get slaughtered, right? Penny stocks will have to do a reverse stock split at 100x, right? It's going to be a horrible bloodbath. That is a very real scenario. This shift will be calling it a Ponzi until it goes to $1 million. To me, a lot of people who will just never accept it because they're frankly too old to learn new tricks. But just imagine that Bitcoin goes on a run through that all-time high versus gold. Once that happens, like, guys, you were wrong the first time. You're wrong. Like, you learnt about it in 2017. You wrote it off as a Ponzi in 2021. It was just a stimulus-driven thing. It was just the ETFs in 2024. If it goes through that all-time high one more time, like 4 times, you're just an idiot.
G'day everyone. Today on Treasury Orange, I'm talking with James Check. Colloquially known as Checkmate, this Bitcoiner is the king of on-chain analysis. If you're looking to cut through the noise on Bitcoin's price action, Check is like your personal Bitcoin life coach. James, welcome to the show.
Thanks for having me on, mate. That's a cool intro.
So Check, for our audience who may have been living under a rock and haven't seen your work, can you walk us through the fundamentals of your on-chain analysis and kind of how you derive meaning from on-chain movement of Bitcoins?
Sure. So I think the best way to think about this is that what is the UTXO set? Like, there's obviously the technical definition where it's like the database of all the unspent transactions, but ultimately it's the current state of play of every single decision everybody has ever made pertaining to Bitcoin using the actual network itself. So every time you're a DCA HODLer and you buy on an exchange and then you withdraw to your wallet, you've left your fingerprint of, I accumulated this much Bitcoin at this date at this approximate price. And then there's a whole bunch of people who then transfer those coins back into exchanges, or they sell them, or they trade them, or whatever else. So there's all the noise as there is in all economic data, but there's a whole lot of signal inside when people bought, how long they held them for, what kind of profit did they lock in, what kind of losses did they lock in. And what I think is so amazing about on-chain data, because Bitcoin is this like grassroots retail thirst, and also it's very emotive, right? It's an emotional asset. People love it. People hate it. People fear it. People revere it. Like, it's a very, very special asset in terms of like just the emotional energy that it brings. And human beings forever, always, the great constant in markets, it's not interest rates. It's not what money we use. It's not what assets out there. It's human emotion, right? Our brain is designed off 100,000-year-old hardware. And our emotions do not change when it comes to fear and greed. We always feel the same way. So what on-chain data, what I think is special about it, it kind of captures that human behavior. We buy tops all the time. We hold all the way to the bottom of the bear, and then we sell everything at the bottom in a loss. And then the smart money step in and buy that, and they hodl for 3 years. And then when everyone's saying there is no ceiling, there is no top, all those old coins are coming back to life. So we see these really consistent patterns of the smart money doing smart money things and the dumb money and the mass just like doing dumb money things. And what I love about on-chain data, it's our collective decisions over time. Every UTXO set is a snapshot, and we're basically stitching together and say, well, how is it changing over time? Do we have more people hodling? Do we have more people spending? Do we have more people taking profit, more people taking losses? And that's really what the story of the Bitcoin ledger is all about.
I love that. You know, Bitcoin really is like one of the purest markets we have today. It trades 24/7, 365. And the fact that we can kind of pierce through and see what's happening on chain, I think is something that, I certainly would love to have that in traditional markets, right?
Mate, I feel blind. I feel blind looking at any traditional asset because I don't have all this like X-ray vision. It's amazing.
Yeah. So like our audience is a Bitcoin Treasury first kind of audience. If you did have on-chain analytics or analytics for who was buying and selling in traditional markets, what would you be looking for, and what do you wish you had for investing in stocks?
Yeah, so definitely there's two metrics in particular. Well, three really. The realized cap, I think, is the most important metric. And it's think about the Bitcoin market cap. We take every coin in the supply and we value it at the last traded price. Now, as we know, not every coin trades at the last traded price. The realized cap is the on chain version of that. And rather than pricing every coin at the current spot price, what we do is we say, well, Satoshi's coins that he mined at zero, they're worth zero. The guy who accumulated some coins back in 2013 at 250 bucks, they're saved at 250 bucks until he moves them again. So every coin is saved at the price when it last transacted on chain. So if you think about this, if you buy a coin, you put $10,000 into the market, you buy whatever that BTC value is at the time, that's saved at 10 grand in terms of value. When you trade it to an exchange and you sell it for 100 grand, someone else had to come in and put 90,000 extra dollars in to buy that same unit of coin. So that's a capital inflow. That dude who bought 100K, he gets wrecked in the tariff tantrum and he sells at 75, guy out of panic. He destroyed 25 grand. So that's a capital outflow. So the realized cap really shows like the true capital inflows and outflows to the system. Now, if we then think about if that's like the aggregate cost basis, how much does the price trade around that cost basis? That's the unrealized profit or loss. That's called MVRV. So that's the other metric. So once you've got the realized cap, MVRV then shows you the incentive, how in profit or underwater are certain cohorts of investors. And then the last one is the system metric of that. If everybody's up on average 230%, what's the average guy who's spending? What are they locking in? And what you see is that the average rate spikes during tops and it capitulates and we get massive losses during bears. So it's like, show me the market size, show me the incentive, and then SOPA is show me the result, right? The locked in profit or loss. Those three, just magic, absolutely magic. And if you had that for every asset, and here's my long-term prediction, at some point, the NASDAQ and the New York Stock Exchange, they're going to work out that they have this data and they're going to start publishing it because it's just going to be, and they'll sell it for an absolute squillion because it's going to be so powerful and so useful.
Yeah, yeah, I agree. It's a treasure trove of information they're sitting on. So when we talk realized cap, how important have the last couple of years been in determining how much capital is flowing into Bitcoin between the ETFs, which are their APs are at least buying on the spot market of Bitcoin. We've also seen a big increase in the futures market and now the options market on top of the ETF, specifically IBIT. How has that affected the realized cap, and where are we sitting in this market currently?
Yeah, so the realized cap this cycle's been a very big one in terms of market structure change. There's been a lot of fundamental shifts. The first one is the realized cap hit $1 trillion, which is pretty awesome. So we're trading over $1 trillion. And if you think about this, right, all those gold bugs who are like, oh, Bitcoin has no intrinsic value. Well, I'm like, I'm looking at $1 trillion of Bitcoiners telling you that you're wrong. Like $1 trillion of actual proof of work for us as investors. We live our lives, we work our jobs, we earn money, we buy Bitcoin with that cash. We've injected $1 trillion. Like, I'm sorry, intrinsic value, my ass. There's your intrinsic value right there. So I think that's the first really cool statistic. That's my favorite thing that's happened this cycle. The second thing is ETFs. They're just a massive shift in market structure, not only from like a serious demand side. I estimate they're about 20 to 25% of demand at any kind of incremental point in time. They've taken in like over $60 billion of just like net capital inflows. Really quite remarkable stuff. We very rarely see outflows. Inflow weeks are like 3 times larger than outflow weeks, and they're much more consistent. So generally speaking, the ETFs are just a tremendous change. It fixes the regulatory fear that a lot of TradFi guys had. They couldn't custody it. They weren't sure if it was going to get shut down. All that stuff just got nuked. Now, you mentioned, so futures has always been the dominant derivatives market. And until very recently, they were still, in terms of open interest, the biggest. But the options on IBIT went live in November last year. So we're coming up to a year of those being live. They've already surpassed Deribit as being the dominant options market. Overall options open interest like 108 billion now. Futures just fell off a cliff. It was like 96 and it got cratered down to 65 or something off that sell-off we had the other day. So futures has like almost halved relative to options. So options really are the preferred instrument now. The way that's going to change, and probably already has changed, volatility structure is very, very meaningful. It's going to take some time for us to fully like digest and understand it. But whenever we talk about derivatives, a lot of people will immediately go, oh, it's paper Bitcoin, right? It's not real Bitcoin. People are just trading, contracts on this thing. And yes, that's true. But you've got to remember that both sides have the same weaponry. If you have a bunch of guys who are selling covered calls and trying to milk the volatility out of Bitcoin, there's another guy over there who's like, there's a lot of guys who are going to be very sad if the price goes above that level, aren't they? So maybe I can squeeze them and actually get those gamma squeezes going. So it's one of those things where, yes, leverage and paper Bitcoin instruments and all this stuff, it no question changes market structure. But both sides have the same artillery. The bulls can take out the bears just the same. And what can actually happen is you get periods of it goes nowhere for a long time. And the next thing you know, it just absolutely explodes. And suddenly all these people are offside on 100x leverage in a very, very painful way. And you know what's going to happen? What I really am looking forward to, not because I want people to lose money, but I like the fireworks. I want to see Bitcoin do a massive move, probably to the upside on a Sunday afternoon. And you've got all these options traders sitting there looking at their screen, unable to do anything, and knowing that Monday morning it's going to say negative 45% of their portfolio and go, oh my God, I can't do that again.
Yeah, absolutely, man. You've talked a lot about how Bitcoin's kind of proven itself as a $2 trillion asset. So that'd be about 100K price for Bitcoin spot. Now, in a lot of mature markets, in equities at least, you see the options market actually surpass the market cap of the underlying. Do you think that's in Bitcoin's future? And how do you think that will impact Bitcoin's price?
Without question. So I did a study when I first started looking at IBIT options. At the time, there was like 40 cents of open interest per dollar in IBIT. We're now at 56%. And I only wrote that piece like a month and a half ago. So in that time, we've gone from 40 to 56. I used GLD, gold, as the example. It was sitting at 120%. So you've got the GLD ETF, and there's 120% of that in GLD options. So yeah, I think it is going to surpass it without question. Many, many years ago, my market mentor, bloke kind of taught me everything about price and how it trades and options and all that. And Doc was basically saying, look, when options go live on Bitcoin for Wall Street, that is the killer product. That is the thing that Wall Street wants to trade. And now that we're watching it happen over such a short span of time, like what a prescient call that was.
Absolutely. So this cycle for Bitcoin, price action's been a little bit different. I think a lot of maybe Bitcoiners who have been around the block expected kind of maybe more of the same, where we saw this 4-year cycle, come and go. But 2025 has been a little bit more, I would say, bearish for that fourth year of the Bitcoin cycle. You published a article called "On the Cusp." I think it was last week in your newsletter. Can you walk us through the bear case that you outlined there, and where do you think Bitcoin is in the cycle? Do you think cycles, as we know them, are a thing? Walk us through that, Check.
Yeah, it's a great question because there's a lot of people who are going to trade. Clearly, their expectations are anchored to the 4-year cycle. They're going to trade the 4-year cycle. So I've done 2 pieces recently, and I use 2 personas: check the analyst and check the hodler. Check the analyst, his job, because our audience is broad, right? We have people like myself who are hodlers. I'm in my mid-30s. I've got plenty of time to ride this wave. I've got my long-term time horizon, and I love Bitcoin. So that's like check the hodler's perspective. And he's very much like, what do I do with the information that check the analyst gives? And check the analyst, we've got people who are professional money managers, people who are retirees, and they don't have time to go through another 3-year bear market. They need more objective, just like give me the no bullshit, no emotion side. So I use these 2 personas to help people like connect their dots, because everyone's got different dots they need to connect. So check the analyst wrote On the Cusp. And On the Cusp was basically saying, guys, look, we've had that deleveraging sell-off. In theory, that's a good forest fire. It's cleared out a lot of that degenerate futures leverage, and it has. That's true. But we also have a tremendous amount, like an absolutely tremendous amount of spot selling. So people can argue over the term long-term holder. We use 6 months in the on-chain world, 5 months, because that is statistically speaking when a coin is less likely to move after that threshold. We are seeing a lot of long-term holder selling, and we're talking about billions of dollars a day. So whenever you see someone go, oh, hang on, how can the ETFs buy 1,000 Bitcoin and price didn't go up? It's like, because long-term holders sold 10,000 Bitcoin, 12,000 Bitcoin. It's because they're irrelevant by size. As I said, ETFs are about 20%. So there's a lot of indicators of momentum slowing down. There's a lot of people who are just going to trade this 4-year cycle. So from a very objective standpoint, I think it is very meaningful, and we should be very cognizant that we have lost a lot of the momentum of the bull. So really, we need something to jumpstart this thing and get it moving again, because otherwise, the more that we don't, the lower down that we trade. And my level right now is 95K. 95K is a very important level. Above that is 62% of all that we talked about the realized cap before. 62% of the dollars invested are above 95K. So now let's just imagine the price going down to 95. All those people who've bought all year, 62% of the dollars are suddenly underwater. I was mentioning that, before, what happens if someone looks at their portfolio and see a big red 45%? There'll be a lot of people who de-risk because they don't want to see that. They don't want to see the market sell off into a bear. So I think there is a very real risk, and in my opinion, the most real risk of a true bear market in place right now. But this is where Check the Hodler steps in. And I wrote a piece yesterday, which is kind of like, okay, what do I do with that information? How do I deal with that as a hodler? So Check the Analyst is rightfully, I wouldn't say outright bearish, but I'm moderately bearish. I'm just saying, look, guys, we have to be very, very careful. 95K is not a long way from 110 where we are right now. It's not a big drop. And if we get down there, I call it the bull's last stand, which means, by the way, the bulls can still fight to maintain that level, but you got to ask yourself, you're really on the back foot if you're getting down to that price. So Check the Hodler then goes, well, okay, let's look at this from another perspective. Sure, all of that is like bearish as a setup, but we're also at 110K, right? So we're below the first line of defense, which is the short-term cost base, about 114K. 110, we're kind of in this gray zone, kind of in between in 2024 and 2025, both of those two choppy sell-off periods. We bottomed. The equivalent level right now is between 100 and 105. And so far, that's where the local low is. So Check the Hodler is looking at this and going, well, between 100 and 105, I'm actually willing to stack sats, even though I know there's a bear potential. Because if I buy coins in that zone, I'm literally just, it looks like a dip. It still looks like a dip. So I try to like bring all this information together and say, look, the risk level is 95. That is a very serious bear. Like if we go below that, I think it's probably over for a period of time and we go much lower. But the other side of it is like, guys, we're not at 95 yet. So until we get there, it kind of still looks like a typical bull market dip in this cycle. But imagine that we keep chopping around until November and then we get into the back half of December and we haven't got upwards momentum. There's just going to be a lot of people who just kind of lose interest. And when you start to lose interest, that's when you actually start to degrade further. So I think we're in a very meaningful period where right now it would be hilarious because if everyone sells thinking the 4-year cycle is dead, and then we have the exact same euphoric peak, like just 2 weeks later, and everyone's like, oh, what? Did I miss it? You can see the FOMO come in. But then you can also see it being a self-fulfilling prophecy. So look, in terms of the 4-year cycle, that's a whole different question. I think, honestly, I don't even think that I do not anchor to it. I don't expect the 4-year cycle to operate. However, I know a lot of people will. So it's one of those things where we actually just have to see. But I think it's very funny from Check the Hodler's perspective. He's more bullish because he looks at the scene and goes, look, what is the funniest position? The funniest position right now, there is so many people who've sold covered calls. We mentioned this earlier. So many people have sold covered calls on Bitcoin right now. In fact, at 105K, which is where we bottomed out before, at 105, only 9% of all the IBIT call options are in the money. Max Payne is 120. And Check the Hodler just looks at this and goes, okay, you got a bunch of people selling, thinking the 4-year cycle is dead. You got a bunch of people who sold covered calls because they thought the 4-year cycle was dead. Wouldn't it be very funny if we ripped to all-time highs from now and all those people suddenly have no Bitcoin and they got to rebuy the all-time high and juice this thing higher? That's the funniest outcome. So Check the Analyst is rightfully cautiously semi-bearish. Check the Hodler's like, yeah, but wouldn't it be funny if we went higher?
Yeah. And Tyler, the speculator, is really hoping that Check the Hodlers, right?
Yeah, we all are. Yep.
For sure. I love Check the Hodler. So that being said, you said, kind of, I think in your newsletter, you said about half of the Bitcoin is out of profit below 105, and then 62% you just said below 95. And we've kind of got that. There's a little price gap, I think, on the way up last November that we kind of just plowed through. It'd be interesting to see if we might test that again. On the flip side, what makes Check the Analyst flip the script and think, the bull market is, back on and we're structurally, moving higher?
Totally. So first things first, getting above the short-term cost basis. And the reason why this is important, the short-term cost basis is basically where in the on-chain world, the average cost basis for all the coins that are moving that last 5 months. So it's kind of all the recent buyers. And it's never going to be a perfect level. Right now it's about 113K, 114K, somewhere in that range. It is a zone of interest because it's really looking at people's recency bias. And to try and kind of articulate what it means, if I asked you right now, you probably couldn't tell me what your cost basis was for your buy 2.5 years ago. You couldn't tell me. I couldn't tell you what mine is, but I do know my last buy. I know exactly what my cost base, and even though it's a small component of my portfolio, I've been in this market for years. My most recent buy is the one that's going to affect my mood the most. It's like an exponential average where the most recent history is going to impact you the most. And it's only when you really, really sell off, you start looking at your whole portfolio. So that's the way to think about it. And it's kind of the midpoint. So the fact that we're below the short-term cost basis right now, it's cautious because we've actually traded below it many times. In previous bulls, we would bounce off it. It was support. This cycle, we've actually consistently traded below it. So getting above that, that's tick one, because I have this rule. If we're above the short-term cost basis, and I'm not talking about like a wick, like getting above it, once we do that, like every single bullish impulse ever in the history of Bitcoin is above this level. So like be a bull. You're allowed to be a bull. When you're below it, be cautious. Once you get too far below it, that's when you got to flip the script. So for Check the Analyst, there's two key levels. First one is above the short-term cost basis. Then I think it's reasonable to be a bull, so 114, which we tried to test this morning, and then 118. The reason it's 118 is if you look at it from both an on-chain, but also like a volume profile, technical analysis, 118, I know the all-time high is 126, but very few people bought coins up there. The next, what we call point of control, or the zone where like if you get above it, there's no resistance. You're in price discovery. That's 118. So I said that previously at 124, we pulled off, and I said if we get above 118, we're off to the races. We went to 126, and then Trump tweeted, and we had deleveragings and all that shit. And if you kind of think about this, very rarely do you get a third touch in markets. Once you touch a support or a resistance level for the third time, the probability it's going to break. So if we think about that from this perspective, if we go back down to 100, that's like the third touch. We probably take it out, and then I think it's bearish because once you go 195 is like a stone's throw away. If we go back above 118, that's the third touch. So my core view is that this market does not want to stay in this price range anymore. We are ready to rock and roll. The question is, which way do we want to go? And those thresholds, I mean, 95 is really the line in the sand, and 118, you go above there, we're going to 150. Like I think this thing just absolutely flies if we clear 118 with conviction.
Yeah, that makes sense. You mentioned, you know, Trump's latest tariff tantrum when he threatened 100% tariffs on China next month. So that precluded kind of like a deleveraging event in the futures market. Do you think that has primed the pump for a move upward if we're headed that way, Check?
What it has done is it's cleared all the degenerates. So we had a stack of people who had basically bet and said, "Oh, they saw much of the same dynamics that I was just describing. That second touch, we're above 118. Here we go, all-time highs." And this was particularly prevalent in the altcoin market as well. People have been waiting and waiting and waiting for an alt season, and then we got that next all-time high on Bitcoin. They said, "Finally, salvation, it's here," and they went max long. And then some of these tokens literally went to zero. So every single futures trade just got cleared, which is kind of brutal, but that's market. So look, it's cleared a big forest fire. The only key liquidation level that we have now for Bitcoin is down at that 100 to 95 zone. So if you get down there, not only are you kind of bearish on the on-chain side, but you probably de-lever a bunch of guys as well, which can just force it lower. So that's why I really don't want to find out what happens at 95. Even though it's the line in the sand, I don't really want to fight that battle. So that's my base case. But for now, I don't think futures play a very big role. What I do think plays a big role is the gamma squeeze from all those covered call and options traders who suddenly are like, "Hey, I'm having a great time," and then suddenly October just rips their head off, and they go, "Oh man, I'm wrecked. I can't do that again." So it's actually the options market that I think is more interesting.
Gotcha. You mentioned that, of course, on every side of the trade, when Bitcoin exchanges hands, someone's selling as well as buying. So a lot of long-term hodlers have unloaded some major positions according to your analytics on chain. Is that something that's emblematic of every cycle, so to speak, that we've been through, Check, or are you seeing maybe a more concerning trend or a different trend than previous cycles?
Yeah, this is a great question. So the answer is it's both the same and it's different. So in every single bull cycle, without question, we always see as we rally, as the market goes into a full scale price discovery bull, we see old coins coming back to life. We call that revived supply. We see coin day destruction, which is like a volume of holding time. Every coin, every one Bitcoin accumulates one coin day per day. So if you held 1,000 coins for 1,000 days, you're going to destroy 1,000 times 1,000 coin days. So we see that spike. We see realized profit, which is the delta between the acquisition and the disposal price. Basically, we see all of these metrics peak as people offload. Now, in previous bulls, 2017 and 21 in particular, it was basically one big sell side event. The market was ripping in one big go, and we just saw this like big wave of sell side. And then it finally capped out the bull, and that was it. This cycle has been different. We saw this, we're in the third wave of that long term holder sell side. The first one was when the ETFs went live in March 2024. The second one was November, December, January of last year, this year. And then the other one has been going on more or less since about May or June, something like that. So on the rally up to 126, 124. So we've had three waves. And this is really interesting because the magnitude, the sheer magnitude of the sell side, as I said, we're talking about billions of dollars a day. There are points in time at those peaks where we've seen 50 to $80 billion a month as like a rate of sell side, like just absolutely massive. And yet we've barely pulled back 32%. So we've pulled back 32% twice this cycle. That's the deepest it's been. Both of those, like the actual wicks, we were there for like 2 hours. So you have to look at this and go like, there is some entities underneath us with just enormous balance sheets, just allowing the market to sell to them. They're not buying in FOMO. They're not hitting the asks. They're basically allowing people to sell to them, and yet the market just doesn't go down. We saw there was an 80,000 Bitcoin clip that got sold. I think it was in June or July. Galaxy as OTC basically unloaded that for this whale. I mean, moving $10 billion, the market went down 3% and recovered within like a matter of 6 hours, 8 hours. There's something under us. And by something, it's many, many entities, but like there's just a buy wall under us that is quite remarkable. And it's just absorbing so much sell side. So selling is a story of demand. As you said, one sold Bitcoin is one bought Bitcoin. So that's a very, very interesting dynamic. And if check the analyst goes, hey, there's a lot of sell side, be careful. Check the hodler goes, yeah, dude, but the market's kind of absorbing it. It's kind of bullish. Like I don't want to say selling is bullish because that sounds dumb, but sometimes it is because you're actually just seeing the absorption, which I think is quite remarkable.
Um, so stateside here, Check, you're based in Australia, obviously. We're really keyed in on what the Fed's doing, and I'm sure, I know through your work, you're definitely paying attention to what's going on in the markets here in the States. Talked to James Lavish earlier today, and his position is that basically QT is definitely on the way out. QE is coming right through the door. How do you think that affects Bitcoin's price? Do you agree with that sentiment that, the easing is just around the corner? There's structural problems with banks and the treasury markets in general. And how do you think of that as it pertains to Bitcoin?
Yeah, so I definitely think that people talk about, rate cuts and all this kind of thing. Like rate cuts is really around the margins because I think Lynn Alden does a good job of explaining this, that it's just really not driven by lending, right? That's not where the money creation is coming from. It's coming from fiscal. So you can cut bank rates and all the rest of it, and it probably doesn't change that much. I think the QT to QE is a much bigger thing. And they're clear, like the Fed is clearly signaling by transitioning out of QT, they're saying there's not enough demand for the bonds. Like there's just not enough demand for the bonds. And if you're at the point where there's not enough demand for the bonds and you haven't run off your balance sheet, then it means at some point in time, there's going to be a crack. Like let's not kid ourselves here. The fiat system is full of fragility and you get one crack and they're going to have to monetize it all. So the end result of this whole thing is they have to monetize it. It's really just a question of under what circumstances and when. It's not a question of if, it's a question of when. So that's really what I think a lot of people are anchoring to. And you just like you can look around any form of the markets. You see, all assets are at all-time high all the time. We started seeing banks in trouble. There's a very clear K-shaped economy where the bottom half is doing quite poorly and the top half is doing tremendously well. There's just so many things that you can see could just be the catalyst to crack this thing, and they're going to have to monetize it. So over a long enough time frame, right? That's at the end of the day. whatever Bitcoin does in 2025, what it does in 2026, none of it matters because they're going to have to monetize the balance sheet. Gold is telling us that this is what they have to do. It's sniffing out that there's something very, very wrong. But gold usually moves months, many, many months in advance of the actual event. And case in point, we didn't know that COVID was coming. We didn't know that they were going to print $6 trillion or whatever it was. We didn't see this coming. There was some spasms going on in 2019 in the repo market and gold. If you look at gold 2019 to 2020, it priced in all the stimulus long before it actually happened. And then all the gold bugs were like, why the hell is it going sideways between 2020 and 2022? Because it was starting to price in that, hey, inflation's going to come ripping back and they're going to have to do rate hikes. So there's a whole dynamic here where gold kind of tells us the future in many ways. And most of the time it does nothing. It's the most boring asset of all time. It does nothing for decades. And then it just moves. And when it moves, it's like a slow moving average or a slow indicator that's really, really accurate. When it moves, you have to pay attention to it. So in my view, like I'm not as deep in the plumbing as James is, but I can kind of just see it. I can feel it in my gut that there's a regime shift coming and it's going to change in a big way.
Yeah. And obviously, we've seen gold's price ripping here this year. Now, Bitcoin hasn't really been that indicator um, in its life cycle. Do you think the education is there, maybe for Wall Street, for hedge funds, for would-be treasury bond buyers, that Bitcoin is a safe haven asset? Obviously, we know it has absolute scarcity in a way that gold doesn't even have. But is it ready to be that safe haven asset? If so, why?
I think it is ready, and I just think that the opinions take time to shift. So I certainly view it as a risk-off asset, but I know, like, if I talk to Mr. Bond Trader over there's no chance. Most of them still think it's dumb. However, I have this gut feeling like there'll be a lot of people who are never convinced, right? Peter Schiff will be calling it a Ponzi until it goes to $1 million, and even then. So my view is it's going to be a lot of people who will just never accept it because they're frankly too old to learn new tricks. I think that's a real thing, or too stubborn. There'll be a lot of people in that bucket. But just imagine that Bitcoin goes on a run, cracks through that all-time high versus gold. That's probably an important chart. Once that happens, like, guys, you were wrong the first time. You're wrong. Like, you learnt about it in 2017. You wrote it off as a Ponzi in 2021. It was just a stimulus-driven thing. It was just the ETFs in 2024. If it goes through that all-time high one more time, like 4 times, you're just an idiot. So I think that opinion will shift once we get that one more move, right? There'll be a lot of people, every single all-time high, particularly versus gold, because there's a lot of people now like dividing everything by gold. Goldbug's been doing this for years, right? Dividing everything by gold. And it's actually quite a meaningful thing. I do it all the time as well because it's my like benchmark, because we know that fiat currencies are unstable over the long run. So you kind of have to pick a different meter of value. And if Bitcoin is punching yet another all-time high with minimal drawdowns, at some point you're just wrong, guys, and they're going to have to work it out. So no, I don't think we're at the safe haven viewing yet. But from a fundamental scarcity perspective, I know I'm very, very confident that Bitcoin is going to outlast me. Very, very confident. I have no issue buying Bitcoin and like having it there for my whole life as my savings, because I'm very, very confident based on its properties, based on the proof of work, based on just the simplicity of it, the elegance of the protocol and the design. I'm very confident that gold and Bitcoin are the only 2 assets that can be a neutral reserve asset globally. Now, the challenge is Bitcoin is only 2.2 trillion. It's simply not large enough. Gold adds an entire Bitcoin market cap every Tuesday, right? So it's just not big enough to absorb sovereign, serious scale flows. But I'll tell you what, at 2.2 trillion, it can absorb a hell of a lot more than it could at 300 billion when FTX blew up, or at 50 billion back in 2016. So the size of it, as it gets bigger, it actually gets more useful. And this is this Veblen good idea that as Bitcoin gets larger in scale, it actually becomes better as money, becomes more useful, which means more people buy it in more size, more people hold it. And here's a thing that I've been thinking about quite a bit recently. Every time you have like a headline on a Sunday, you get every single macro and traditional trader in the world being like, haha, look at this terrible store of value. And they post like the 1-minute chart of Bitcoin falling down. And I'm looking at that and going, guys, that is the indicator for your portfolio on Monday. Bitcoin is telling you what's going to happen to risk assets. And if we go back to gold as like the long-term view, Bitcoin is the short-term view. Gold tells us where we're going. Bitcoin tells us the road to get there. If you're a trader, you can tap Bitcoin on a Sunday night to do something about your portfolio on Monday, to have capital reserves. Might make sense to have some in the portfolio as that weekend liquidity. If you're an investor and you see the market sell off and then recover every single time, might make sense to get some. In fact, maybe you should step in and buy it on that Sunday dip because it turns out to be very well. So I think that there's just a lot of indicators here that are saying like, kind of might make sense to get some, because if you're a trader, it's actually quite useful. If you're an investor, it's really useful. So on both fronts, stick some in the portfolio because you might need it.
Yeah, well said. Part of the trick is we as Bitcoiners know where Bitcoin's headed, but option traders are always going to get wrecked because markets can do things in the meantime that are unexpected. It's kind of like that gradually then suddenly, as Parker Lewis kind of says.
Totally.
So, one of the ways I think that Bitcoin is going to climb up that global asset chart even more and maybe start to cannibalize gold is through the Bitcoin Treasury phenomenon, and specifically through Strategy, Michael Saylor's company. So, how do you think, Check, about I guess first of all Strategy, and then the Bitcoin Treasury phenomenon in general?
Yeah, I think it's important to make that distinction because the difference between 640,000 Bitcoin and 5,000 Bitcoin is approximately 640,000 Bitcoin. You know what I mean? So like Strategy is just in a different stratosphere in terms of size. So obviously Saylor and Strategy pioneered this whole idea. And I think my framework for thinking about this is the Bitcoin Treasury is not the product. And I think too many people get hung up thinking that the Treasury is the product. It's not. Just buying a bunch of Bitcoin is not the product. The means by which you accumulate it is. So Strategy is the prime example. Their product, they're a bond salesman. They sell bonds. Yes, they wrap them in a preferred stock, but they sell bonds. And they're relatively high yielding bonds. If they continue to pay them, then they're going to have demand. And as people start to buy these things, he has more means to actually accumulate the Bitcoin. So the Bitcoin is a means to an end of creating a financial instrument that the market wants, a 10%, an 8%, whatever it is, yielding bond. So that's the way that I think about it. If you then look at some of the smaller treasury companies, if you have 5,000 coins, and the reason I use that is like a big chunk of these things that have like 5,000, it seems to be like the center of gravity for the long tail. 5,000 coins, Bitcoin goes to $1 million. Okay, you're a $5 billion company. What are you going to do? Change the multi-trillion dollar bond market? Like, I'm sorry, you're just not big enough. So and Bitcoin might go above 1 million, but it's a journey, right? It's not going to be a quick process from here to there. So when I really think about this thing, how big do you need to be to actually issue the instruments that people want to buy, the bonds, the tools by which you accumulate the treasury? And Strategy really is the only one that is of a scale and a size that is big enough to justify that. Now, there will be I think like most things, there'll be a Pareto distribution. There'll be booms and busts along the way. But my general viewpoint is unless you hit escape velocity, I just don't think there's a case for these things. Because if you think about it from like an investor standpoint, a lot of people have bought these smaller treasury companies at like 6x MNAVs, 10x MNAVs, and they've all compressed to one. A lot of them are trading well below one. You're probably never going to get your money back. Like, honestly, I think if you bought into those stocks, you've destroyed capital. I just think that's how it plays out. Now, sure, they may bounce off the bottom, but you're now in the world where you're trying to buy penny stocks. And what happens if they get acquired? Because that's, people say, oh, but they're going to get acquired. I'm like, yeah, but no one acquires a stock at a good price. They acquire the stock that's trading at a horrible discount because it's a good deal for them. It costs money to acquire a business, to unwind it, we saw Strive take over Semler. They've got a bunch of legal shit going on. They've got to unwind the medical business. Like, that's going to cost money, lawyers, the whole lot. Just buy the Bitcoin. So your discount has to be like meaningful enough that it still makes sense to buy the business and do all the logistics of unwinding it. And then you as the investor, I use this case study. I used to be a mining engineer, and I was working on a project in the UK, and it was a sad story because a lot of people were investing at like 40 pence on the shares, or 40 cents in UK terms. So they were buying into these shares at 40 cents. And the mine was going to go ahead. But what happened is the company failed to raise money on their bonds. The company basically went under, and an American mining giant came in and acquired the business at 5 cents on the dollar. So all these people bought in at 40 cents. They rode the wave all the way to 5 cents. They got bought out against their will and then the mine's going to go ahead anyway. So it's going to make all the money. It's going to make all the money that they expected. But you got bought out at 5 cents rather than 40 cents that you invested. And I just look at these treasury companies. I'm like, guys, that's going to happen to a lot of these things. If you go down the M&A pathway, you're going to get bought out at a terrible price. So I look at a lot of these dynamics, and I can't convince myself that we need thousands of these things. And I should make a very clear distinction here. When I talk about treasury companies, I'm not talking about profitable operating businesses that sweep their cash flows into Bitcoin. Whole different thing. Great stuff. Do it all day. That's what we do as a business. Awesome. I'm talking about, I'm going all in, sailor strategy. I don't have an operating business. All I do is sell shares to buy Bitcoin. If you can't tap debt markets, if you can't tap preferred markets, if you don't get favorable terms on your deals, the only thing you have is selling equity. And at some point, the investors are going to go, I'm sick of getting diluted and there's just no upside for me. And I think we've seen countless examples of this in the shitcoin industry where the market cap hits all-time high and the price hits all-time low because there's so much dilution. And you don't great, you now own shares in a $50 billion company, but you've been diluted 600% and your shares are worthless. The only statistic that matters for treasury companies, there is only one: number go up. If your stock price does not go up, your investors do not give a shit about accretive dilution. They don't care about Bitcoin per share. They don't care about any of this stuff. They care about, am I wealthier? Because otherwise I should move into Bitcoin.
Yeah, makes a lot of sense. Uh, definitely sentiment in the pure play Bitcoin treasury market is in the toilet. A lot of people did get wrecked. You saw 70, 80, 90
95.
drawdowns. Yeah.
95% down is down 90% and then cut in half again. It's
Yeah, it's like a
brutal.
Bitcoin cycle on a speed run.
Yes.
Yeah, so I think a lot of our viewers are going to view that as, you being really bearish, but I think something where we might find a little bit of common ground is that there's going to be that Pareto distribution, where there's going to be some other winners in the marketplace. And here at Treasury Orange, that's kind of what we're trying to cover. We're trying to educate would-be investors, listening through the noise, looking through, sifting through the trash and finding those treasury companies that may have really good management teams and that are going to be able to tap the market in a way that maybe Sailor hasn't. So, one of the companies we've highlighted is Strive, like you mentioned. Definitely the merger or the acquisition of Semler is another point. But just seeing the management team that they have and the experience that Matt Cole, their CEO, has. He's a Bitcoiner, but I think he is really well connected into fixed income markets. He used to run the biggest fixed income pension in the United States. I think, companies like that will have an opportunity at least to really kind of tap that multi-trillion bond market, like you said. So, yeah, I don't think we're in this place where Estonia needs a Bitcoin treasury
Yeah,
company or.
exactly. I'm short the idea that we need one in every jurisdiction. Yeah.
Yeah. I think you're right. Like the more bullish thing is that we saw, Figma IPO with hundreds of millions of dollars of Bitcoin on their balance sheet. That's always how I thought this was going to go. I thought people were going to run more the Tesla playbook
Yes.
and see how Bitcoin performs on their balance sheet, or like a lot of private companies run their business, and just buy more Bitcoin. So this has been an interesting phenomenon. It's been something we've been excited to cover, and we do think there are going to be more winners because I think once you get that flywheel up. To maybe the $10 billion range. Maybe it's bigger than the 5,000 Bitcoin, like you mentioned. I think there is so much capital on the sidelines looking to get access to Bitcoin that's just been trapped. And we expect to see a lot of innovative products in the space. So time will tell. We could definitely be wrong on that, but in the meantime, we're going to be covering that.
So here's a question I want to just put to you. If I hear this story about trapped capital a lot, and I understand trapped capital when it comes to something of the size of strategy. That makes sense. Is that trapped capital going to go out and buy a penny stock? Because a lot of these are literally trading under $1 now. So is that trapped capital actually going to buy a penny stock, or are they going to go and look at the giant and say, well, I'll go through strategy instead?
Right, exactly. I think strategy definitely is at the tip of the spear there, and they're going to be the ones attracting more of the capital. I do think these companies can do reverse splits where I think of someone like my wife is on a state pension here in the United States, and the types of companies whose bonds they invest in, they do invest in companies who are under $100 billion in market cap size for a small portion of their portfolio. So, if you multiply that here in the States, you've got 50 states with pension funds, you've got the federal government with pension funds. I think, there is still a way to come to market with maybe an innovative product that strategy isn't offering to the fixed income space. Specifically, like I said, I know the pension space a little bit more. I think there is room for some innovative products to bridge the gap where strategy hasn't been doing it, and I think a lot of it is going to be in the sales, right? So I think these treasury companies are selling a product, and they've got to put their sales team out there, and that's why I think Strive in particular does have a great salesman who's been there, done that with fixed income, but really anxious to see that. That was a really good question, Check. I think a lot of these will end up selling their Bitcoin. I think a lot of them will be acquired at a deep discount because you really need full shareholder buy-in. We even
Totally.
saw with Semler Scientific, they tried to go the preferred share route and their shareholders rejected that. So it'll be interesting to see where the space goes. So one thing I'd like to leave our viewers with is in the postscript of your last newsletter, you talked about selling your hedge in MicroStrategy. WNTR was a ticker you were using, and you said, "I'm just going to use the cash to buy Bitcoin instead." That strikes me as Check the hodler kind of piping in and saying, screw it, we're going higher. So, and you're just stacking your sats. So, what made you change your mind on a dime like that, and where are we headed? Check. What's your gut telling you?
Yeah. So again, on the cusp, I think I released on Friday. And as part of that, I said, look, because I sold my MSTR, because and the reason I sold my MSTR is actually very, very simple. I bought it before we went to 124K, right? On that run up. I was like, okay, Bitcoin looks bullish. I think we're going higher. I'm going to buy MSTR as like a levered play. And I'm talking about 2% of my portfolio here. That's my risk play for this move. Bitcoin went to 124K. We hit an all time high, and MSTR kind of went up. And then it pulled back. And then we chopped around for about a month or two in August. And then we went up again to 126K, and MSTR kind of did okay. And then we had the deleveraging, and MSTR got wrecked. So my thesis was Bitcoin's going to go up, and MSTR is going to be a levered play on Bitcoin. It's going to do better. It did neither of those two things. It did far worse, even though Bitcoin did great. So from that perspective, I eventually go, you know what? My thesis for why I bought this thing was wrong. So I sold it because it was like, you know what? I took a loss, and honestly, I don't care. This is part of the journey. I took a loss, and I was like, you know what? My thesis was wrong. I need to take out into cash and then do a reassessment. So when I wrote on the cusp, which again, from Check the Analyst perspective, and by the way, all those views are still very, very valid. If we trade down to 100, I think we go to 95. And if I think we go below 95, I think we're heading to 80. That's a horrible thing. MSCI is going to get slaughtered, right? Penny stocks will have to do a what do you call it? A reverse stock split at 100x, right? It's going to be a horrible bloodbath. That is a very real scenario. So, and again, we're talking about 2% of my portfolio here. So my view was, look, I don't think, like, even if we go to 80K on Bitcoin, that's like a 35% off the all-time high. That's not a bear market by any historical standpoint for Bitcoin. For treasury companies, it's going to be a bear market by all standpoints. So if Bitcoin goes to 80K, I'm like, look, it's going to be volatile, but the downside is not going to be horrific. I think MSTR probably gets wrecked, but like when you look at the way that Winter would trade, it should pay very, very healthy dividends if MSTR is just volatile to the downside, but not like cratering to zero. So I was like, I'm going to buy a little, like half of my 2%, so 1% of my portfolio, just to test this thing out. Anyway, over the weekend, that was on Friday, over the weekend, because I've been bullish for the entire cycle. In all of my writing, I've been fairly explicit that like I've remained a structural bull, even when there's been periods of downside. I've been like, I think it looks like a dip. I think it looks like a dip. On the Cusp is the first piece that I've written since writing this thing in April 24 that I've been outright bearish. So then I said, okay, given such a magnitude of a shift, I want to take the weekend and just reassess my position. Like actually look at this thing with a piece of fresh eyes. And I wrote a piece on Monday called Fresh Eyes from Check the HODLers perspective, and just saying, if I attacked this problem, having now sat on my, it's kind of a self-reflection piece. Would I come to the same conclusion by looking at information from a slightly different lens? And anyway, at the conclusion of that piece, I said, look, Check the HODLers actually kind of bullish. And then I really took a step back and go, well, Why did I buy Winter? Because it was a trade, and I hate trading. I don't trade. I think trading is a horrible sport. I kind of just assessed my own behavior. I was like, by the way, it was right. I made money on Winter. I made almost as much as I lost on MSTR just in that like 2-day period. And then I sold it. And I was like, you know why? Why did I sell it? Because my thesis was, oh, hang on a second, I want to try and trade this thing and like get no, fuck that. Couldn't be bothered. I actually just want to buy Bitcoin because, like, at the end of the day, I'm a Bitcoiner. So, if MSTR isn't filling the thesis that I thought it was going to do, what does fill the thesis? Bitcoin. Just buy a Bitcoin. So, I would rather actually have that cash and be more opportunistic and actually buy the dip, rather than worrying about, oh, I've got a hedge and I want to stack sats. I'm like, no, I got too much stuff to do. I got a family. I got business. I got stuff to analyze. Every time I trade, I can do it, by the way. I'm relatively good at it, but I hate it. I hate the feeling of having a position on. It just absorbs too much of my creative energy, and I don't feel like it's productive time. I like to actually analyze the market because I just think it's a big puzzle. So intellectually, I find trading really boring, and quite stressful and not fun. So I was like, just get rid of it. Like, it's just not worth my time worrying about that position. I would actually rather just analyze the market and just stack sats at opportune times. That's it. So it was more of a simplification from a life perspective.
I love it. You're putting your money where your mouth is, Checkmate. So this has been incredibly valuable, talking about your on-chain analysis and your take on Bitcoin treasury companies. Where can people follow your work and subscribe to your stuff?
Yes, so you'll find me on Twitter @_checkmatey, and you'll find us over at checkonchain.com, one word. And yeah, we do a basic newsletter. We do 2 posts a week, written and video. And we also have a free charting website, which has got treasury company metrics, strategy metrics, Bitcoin metrics. It's all free. So head over there, and if you don't have a chart, let me know and I'll see if I can knock it up.
Yeah. Everyone, listen, you need to check out his website. Those charts are gold. The newsletter is gold every week. So one thing we have all our guests say, Check, before they leave is stay orange.
Stay orange.
All right. Ladies and gentlemen, the man who sees Bitcoin through on-chain colored glasses, Checkmate.